All right, guys. First of all, as we start here, what is going on? It's Wednesday, Hump Day, December 10th. You are watching the Coin Zone. I'm your host, Crypto Paul. The Federal Reserve cut interest rates by 25 basis points. Was anybody surprised? I think this is what everybody was expecting, even Kalshi. All right, guys, as we know, we talk about Kalshi a lot all the time here on the Coin Zone. Kalshi predicted as forecasted by Kalshi traders, the Fed cut rates by 25 basis points. Now let's switch over to Anthony Pompliano, who has been calling for a 50% basis point cut for a long time. I know he was calling for it, but I did not expect Jerome Powell to do this at all, and he did not do it. So if you guys are just joining the stream live, we will be watching Jerome Powell give a speech in around 14 minutes or so. So stay tuned for that. We got the tab pulled open. All right, guys. FOMC press conference. We're waiting for Jerome Hard Hat Powell to go to the podium. Now, Fed expected to cut rates but signal a pause. This was Reuters. So we'll see what Jerome Powell says. This was before the decision just now announced around 15 minutes or so. Just in, Federal Reserve to buy $40 billion worth of Treasury bills over the next 30 days. Yes, the memes are absolutely amazing. Jerome Powell. Honestly, you love to see it. Our guy JP, Hard Hat Powell, getting it done. This is incredible. Whoever does these makeovers, this looks so seamless. It genuinely looks like Jerome Powell is DJ right now. Great job, guys. Let's just keep it moving, guys. Even Jim Cramer is calling you out. If you are negative ahead of the Fed meeting, what are you doing here, guys? Even Jim Cramer is calling you out, guys. People getting negative ahead of the Fed meeting. That is pretty crazy to see. Okay? Now, let's just keep it moving here. The Jerome Powell starter pack. All right, here we go. Hello, everyone equals bullish. Good afternoon, bearish. You guys let me know in the comments, what are we expecting Jerome Powell to say in around 15 minutes or so? You can actually bet on this. In Polymarket Kalshi, I believe they have it. Sometimes it just makes me chuckle. What will Jerome Powell say? Is he going to open with good afternoon? Or is he going to open with hello, everyone? For me, I'm going with good afternoon. I know that's what he said last night. I believe the last time. And again, guys, Kalshi, calling it as it is. 97% chance of a 25% basis rate cut today. I just said that completely wrong. I'm sorry. I'm still a bit tired today, guys. But let's turn our attention to this right here as well. Polymarket website visits hits 19.9 million in November, beating DraftKings and FanDuel. We got Kalshi at number 8. Crypto is doing amazing thing, guys. All right, this is competing with Robinhood, with Coinbase, beating out DraftKings. Hyperliquid's up there. Look at all these prediction markets, guys. A lot of crypto in here. Great to see. Pretty awesome to see. Guys, hit me up in the comments. All 113 of you, 14 with me right now on live. We're getting ready to see Jerome Powell speak in around 10 minutes or so. Very interesting. Very excited to see Jerome Powell take the stage here in a little bit. Are we expecting anything too crazy? This could be one of the last times we hear of Jerome Powell. Okay, obviously we all know Trump has someone else he wants to put in place. Kevin Haskett, right? New Fed chair. We'll see. We will see, guys. Let's see. Kevin Haskett. Is it Hassett or Haskett? I keep forgetting. Fed chair. Let's see. But this is the guy that Trump wants to put in next. All right. I know I already said this, but I don't think Kevin Haskett will be the next head of Fed chair. Kevin Hassett. I said Haskett. I was close. All right. But let's learn a little bit more about this guy. This guy's been all over my timeline the past couple weeks or so. He's now the heavy favorite to become the next Fed chair. A lot of individuals are saying this is what's going to happen. Oh, I love the hard hat Powell little shake here. We love to see it. Love to see it. Let's click on this one. The Polymarket for who will Trump nominate as Fed chair is turning into a full-on battleground. Kevin Hassett still leads at 71%, but that 6% drop is the first real wobble we've seen. Kevin Warsh up to 13%. A lot of Kevins here, guys. Christopher Waller, I thought that said Wallace. I was like, Biggie Smalls is going to be the next Fed chair. Freaking A, guys. We're going to have freaking craziness. What is Tupac going to be the head of the SEC? What's going on here? Is anybody watching the Diddy trials on Netflix? It's absolutely insane. It's absolutely insane, guys. Let me know in the comments, all right? We're covering Fed Chair Powell in 10 minutes, but in your spare time, let me know if you're watching the Diddy trials because I've been seeing them. Shout out to 50 Cent. It's been absolutely insane so far. Absolutely insane. Let's just keep it moving here, guys. Insider Whale has opened up a $321 million ETH long position before the FOMC meeting. Probably nothing. I mean, so far, bro is doing pretty good considering Ethereum just broke over $3,400. We have Bitcoin hitting over $93,000. Things have been looking pretty damn good in the markets today. Ladies and gentlemen, why don't we go over to Coinbase and take a look at what is happening in the markets today at the moment. So Bitcoin is now down for the day. Okay, back down to 92, just under $93,000. Everything else is in the red, including even Cardano, who is having a great run, leading the top 50 yesterday in terms of gains because of this midnight launch. And speaking of midnight, guys, I would pay attention to this. Midnight is already in the top 100, beating out VeChain, coming close to Filecoin. This is absolutely insane, guys. I mean, Midnight's been around for 2 days. 2 days, and it's already this big. Let's take a look here on Coinbase. We go all the way down. Now, there's a lot of good projects in this space here. Ondo Finance. You know, we're getting down to the one billies right now. Caspa still over 1 billy. Still at 5 cents. Insane to me. Polygon. I've heard even they're talking about switching it back to Matic because people associate it with that. Polygon's still low, so only $1 billion market cap. 13 cents. I wouldn't sleep though. And there we go. Midnight. Up 57%, guys. While everything else is just poo-pooing. As Kevin O'Leary said the other day, Midnight is now in the top 100 and is now above Filecoin, approaching Cosmos. Absolutely insane to see. Cosmos has been around for a long time. And here we go with Midnight, guys. We covered Midnight yesterday, got up to 12 cents as a high. Okay. And now we're trading at about 6. But again, guys, before we get to Fed Chair Powell here in a second, we're looking at all angles and sides of everything that's been happening in this space here as of late. Also, a quick update, a silly, amazing update for me, guys. I'm going to show you guys something that almost made me poop my pants this morning. I'm going to be honest. Charles Hoskinson followed me this morning, guys. Yeah, that was pretty crazy to see. So if you guys want Charles Hoskinson to be a guest on the Coin Zone, if you're watching right now and you're a Coin Zoner, you've been with me on the live streams, you've seen our other videos, you like what we do here, first off, make sure to sub to the channel, like this video, follow us on socials. But if you like and appreciate the interviews that we do here on this channel, we do a ton of interviews. We take this very seriously. If you guys appreciate the interviews that we do and you want to see Charles on the channel here, do me a favor and tweet at him for us. Say, hey, you know, at Charles, would love to see you on at the Coin Zone with at Crypto with Paul. If you guys do that, I'll love you forever. That would be absolutely amazing. So that happened today. I was flabbergasted. Now back to it. Midnight at around 6 cents still. Up 57% on the day as everything else is going in the red. So pretty wild to see. Privacy will be a big point and a big narrative here in the future. So I would stay tuned. I would keep my eyes on what Midnight is going to be doing here in the short term, but also in the long term. I think Midnight has the potential to be a very long-term play here. So we're going to keep our eyes on that. Back to it, guys. If you're watching, you're just joining the stream. The Federal Reserve did go ahead and give us a 25% basis point cut. Chief the Yorkie, what's good, brother? What are the tokenomics of Night? Well, it has a cap supply. Great to see that. I believe it's capped at what, like 24 billion? I believe it is. So right off the bat, for me, anything with cap supply, I'm much more in favor of. That's honestly the only cryptocurrency I invest in have cap supplies. You know, everybody has a different way of going about things. For me, that's what I like to look at. So Night has a cap supply. The tokenomics, it so far has been completely fair launch. Distribution to tons of different community holders, including outside of ADA. We're talking XRP, we're talking Solana, we're talking Ethereum. So a ton of individuals were able to just, if you wanted to, as I did, participate in the Glacier drop. I was able to mine some Night tokens that I will be redeeming soon. And then also, if you're an SPO, you're a Cardano stake pool operator, and you delegate to one of those guys to earn ADA, you know, via staking, you can now also earn Night. It's pretty interesting. So there's a lot of advantages to this token, and the privacy aspect, what it could be doing with healthcare, the partnerships with Google, Azure, what they're doing already is pretty remarkable. They just launched and they already have a ton of partnerships lined up, ready to go. They're bringing in stables, all this stuff. There's a lot to go. Right now, the trading volume on ADA is going crazy because of Night. So it's good to see. You know, it's just launched. There's hype, etc. It's up 57%. Great. We'll see how sustainable that is. You know, I'm sure it's going to dip, find its, you know, its normal value, and then over time, we'll see how it does. But yeah, Chief the Yorkie, great question. And that's how I look at it. We're going to see what's going to happen here. 3 minutes until FedShare takes the stage here, guys. All right. Very, very excited. Why don't we share our screen? They now have the music going live. So I'm going to maybe put our background music to the side, and we have the FedShare music. This lovely music that they got playing for us here. Let me know if you guys can hear this. Watch live December 10th. That is today. We got a couple minutes until we hear from Jerome Powell. Now we got the 25% basis point cut. He will be addressing that. Chat, let me know in the comments. Will Jerome Powell take the stage and open with hello, everyone? Or will he open with good afternoon? That is the question of the day. All right, back to it. Hello, everyone equals bullish. Good afternoon equals bearish. This is stupid psychological things here, but this is kind of the reality of it. As hilarious as this is, it's true for some reason. Kalshi has the odds of what he's going to say. People either make or lose money off of his opening remarks.
Good afternoon.
It's funny, guys, but it's true. And I appreciate you guys for tapping in so far here on the Coin Zone. We got 2 minutes until Jerome Powell takes the stage. If you're just joining the stream now, do me a big favor and hit that subscribe button. We're trying to reach 3,000 subscribers before the end of the year, so help us get to that goal, that milestone, guys. If you like the content here, just do us a favor, hit that like button and subscribe to the channel. Now, before we go and see Jerome Powell, Hard Hat Powell, our favorite guy, take the stage here in 1 minute, I'm going to shill real quick. Okay, we have our latest interview is out now with Angry Crypto, fan favorite of the channel here. Love to see it. Very excited. 2 days ago that came out now. If you want to learn more about Cardano and XRP, Angry Crypto is now covering XRP content as well. Does a great job. We love him. Shout out to you, brother, Angry Crypto. Let's get it. Go watch that video for us, guys. It's a great interview. Okay, now back to it. FedShare. Let's see what happens here, guys. I appreciate you guys all for tapping in. We got about 30 seconds to go, maybe another minute, to see Jerome Powell give some remarks about the economy. We'll see what the Federal Reserve says. This could be one of the last times we ever hear of Jerome Powell, which is kind of sad, okay? Whether you like him or not, we had a lot of fun here together, covering the FOMC meetings, covering live the construction meeting with the hard hat. And here we go. Tuning in live now. The music's about to fade. Jerome Powell is about to take the stage. Hello, everyone, or good afternoon. Let me know in the comments. Here we go. Jerome Powell about to speak. Love to see it. Very excited. Jerome Powell, about to take the stage. I feel like a golf announcer now, just being all quiet. Going for birdie. And he's got the birdie. Just kidding, guys. All right, Jerome Powell, a bit late here. Here he comes. Oh my God, it's happening. All right, guys, let's listen.
Good afternoon.
I knew it.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. As a separate matter, we also decided to initiate purchases of shorter-term Treasury securities solely for the purpose of maintaining an ample supply of reserves over time, thus supporting effective control of our policy rate. I will have more to say about monetary policy and its implementation after briefly reviewing economic developments. Although some key government data have yet to be released, available indicators suggest that economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand. In contrast, activity in the housing sector remains weak. The temporary shutdown of the federal government has likely weighed on economic activity in the current quarter, but these effects should be mostly offset by higher growth next quarter, reflecting the reopening. In our summary of economic projections, the median participant projects that real GDP will rise 1.7% this year and 2.3% next year, somewhat stronger than projected in September. In the labor market, although official employment data for October and November are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. The official report on the labor market for September, the most recent release, showed that the unemployment rate continued to edge up, reaching 4.4%, and the job gains had slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. In our SEP, the median projection of the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Very little data on inflation have been released since our meeting in October. Total PCE prices rose 2.8% over the 12 months ending in September, and excluding the volatile food and energy categories, core PCE prices also rose 2.8%. These readings are higher than earlier in the year as inflation for goods has picked up, reflecting the effects of tariffs. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have declined from their peaks earlier in the year, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 2.9% this year and 2.4% next year, a bit lower than the median projection in September. Thereafter, the median falls to 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 3.5 to 3.75%. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. A reasonable base case is that the effects of tariffs on inflation will be relatively short-lived, effectively a one-time shift in the price level. Our obligation is to make sure that a one-time increase in the price level does not become an ongoing inflation problem. But with downside risks to employment having risen in recent months, the balance of risks has shifted. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. Accordingly, we judged it appropriate at this meeting to lower our policy rate by a 0.25 percentage point. With today's decision, we have lowered our policy rate 0.75 percentage point over our last 3 meetings. This further normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2% once the effects of tariffs have passed through. The adjustments to our policy stance in September bring it within a range of plausible estimates of neutral and leave us well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of 2026 and 3.1% at the end of 2027, unchanged from September. As is always the case, these individual forecasts are subject to uncertainty and they're not a committee plan or decision. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. Let me turn now to issues related to the implementation of monetary policy, with the reminder that these issues are separate from and have no implications for the stance of monetary policy. In light of the continued tightening in money market interest rates relative to our administered rates and other indicators of reserve market conditions, the committee judged that reserve balances have declined to ample levels. Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates, rather than day-to-day discretionary interventions in money markets. In this regime, standing repurchase agreement or repo operations are a critical tool to ensure that the federal funds rate remains within its target range, even on days of elevated pressures in money markets. Consistent with this view, the committee eliminated the aggregate limit on standing repo operations. These operations are intended to support monetary policy implementation and smooth market functioning and should be used when economically sensible. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing our inflation sustainably down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. At the Fed, we will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Love to see it, guys.
Thank you, Howard. Howard Schneider with Reuters. Just first turning to the statement, just to be clear, we're on the same page here. The insertion of the phrase, considering the extent and timing of additional adjustments, does that indicate that the Fed is now on hold until there's some clearer signal from inflation or jobs or the evolution of the economy along the baseline outlook?
So, yes, the adjustment since September, putting our policy within a broad range of estimates of neutral. And as we noted in our statement today, we are well positioned to determine the extent and timing of additional adjustments based on the incoming data, the evolving outlook, and the balance of risks. That new language points out that we'll carefully evaluate that incoming data. And also, I would note that having reduced our policy rate by 75 basis points since September and 175 basis points since last September, the Fed funds rate is now within a broad range of estimates of its neutral value, and we are well positioned to wait to see how the economy evolves.
And if I could follow up on the outlook there, it seems like with the additional GDP growth coupled with easing inflation and a fairly steady unemployment rate, this seems like a pretty optimistic outlook for next year. What's given rise to that? Is this an early bet on AI? Is there some sense of improving productivity out there? What's driving that?
So a number of things are driving what's happening in the forecast. And I would say if you look broadly at outside forecasts, you do see a pickup in growth in many of those now too. So it is it's partly that consumer spending has held up, it's been resilient, and to another degree it is that AI spending on data centers and related to AI has been holding up business investment. So overall, the baseline expectation for next year is, at least at the Fed, and I think with outside forecasters too, is a pickup in growth from today's relatively low level of 1.7%. I mentioned that the FOMC Meeting is 1.7 for this year growth and 2.3 for next year. You actually, some of that is due to the shutdown. So you can take 0.2 out of 2026 and put it in 2025. So it would really be 1.9 and 2.1. But overall, yes, for a few reasons, fiscal policy is going to be supportive. And as I mentioned, AI spending will continue. The consumer continues to spend. So it looks like the baseline would be solid growth next year.
Thank you, Mr. Chairman, for taking our questions here. You had previously described rate cuts in terms of a risk management framework, and kind of following up on what Howard was asking.
All right, guys, sorry, CNBC guy, but I'm going to pull this out a little bit. Let's just talk about some things and kind of recap everything that Jerome Powell just announced so far. Okay. So, first off, guys, a couple of things I wrote down, and we're going to look at a couple tweets as well. We're also going to take a look at the Trueflation Index, just to kind of go back and forth of what Jerome Powell is saying now. So, first off, what he just said, okay, this is a big focus that we've been talking about on the channel for a long time now, and I personally talk about on my own social medias. AI spending, okay, investments in data centers is holding up the U.S. investment space. All right, AI is huge. Okay, you got to just look at the S&P 7 overall. Okay, Tesla, Amazon, Microsoft, Meta, right? What are these guys doing? Well, they're all Google. They're all talking about building data centers in space because we need more compute power. Our grid can't even take it. If we want to see all these marvelous things AI is going to do in the future, we need to build this infrastructure out. And we're seeing a ton of investment come into the United States because of this. So this is huge. And he just said because of all these things, because of the policies that Trump is doing, we're not seeing it yet, but we're going to see the reverberations, Jesus Christ, I'm sorry, next year in 2026. Jerome Powell himself, who has been combative of Trump, just said solid growth next year. Everybody is expecting that. Even CNN, okay, the daytime news, CNN, not Trump people, guys, are talking about all these things that are aligning and how we're possibly going to see great growth next year in the economy in 2026. Something I've been saying as well. Again, inflation remains somewhat elevated. Sure. Let's take a look at the Trueflation Index. We're at 2.52% overall, guys. Okay. Now, compared to where we were at under the previous administration, this is great. And we're going to probably drop lower. They have their target of 2%, which is all fugazi. This is all made up, guys. Okay. But either way, if that's their goal, and we're going to continue to lower it while also continuing to get a boost in the economy, while also getting cheap money entering this system, according to Anthony Pompliano, we're going much higher. That's just a fact, guys. Couple other things. Effects of tariffs, short-lived, and 3/4 over 3 meetings, they lowered the rates, which is what Jerome Powell has done. So we could argue he could have gone more the past 3 meetings, but this is what happened. Okay? Now, Jerome Powell also said what we're seeing and what they're doing right now will stabilize the labor markets. These are all very positive things for the economy, guys. All right? Let's take a look at the Kabisi letter. We love the Kabisi letter. Adam Kabisi does a great job here. If you guys don't know, maybe give them a follow here on X. Quick recap. Summary of Fed decision. Number 1, the Fed cuts rates by 25 basis points in third rate cut of 2025. Number 2, the Fed will consider extend and timing of additional adjustments. Number 3, the Fed will begin purchasing U.S. Treasury bills on December 12th, $40 billion. Fed will buy $40 billion of U.S. Treasuries in 30 days. They're not even waiting until 2026. That's very, very bullish. FOMC members Schmid and Goldsby dissent in favor of no change. Bruh. Number 6, Fed signals rate cuts may be done for now. However, guys, no one really cares what Jerome Powell has to say because who cares, right? Why do I say that? Well, let's go over to Dan Gambardella, Crypto Capital Venture, great YouTube channel, great technical analysis guy if you don't know him. Fed has officially cut rates by 25 basis points. Careful listening to Jerome Powell or being misguided by hawkish headlines because as we just heard from Secretary of Treasury, who we love to cover on this channel a lot, Mr. Scott Besson, Scotty doesn't know. Scott said, with the new nomination being announced soon, quote unquote, no one is really going to care what Jerome Powell has to say anymore. Not trying to be rude to one of our favorite guys, JP. Well, he's not one of our favorite guys. I just like covering him in hard hat situations because it's funny. The hard hat meeting was hilarious. But in reality, guys, that is an overall of what we can expect. If we go a step further, James Lavish, okay, covering what the Kabisi letter said, the Fed will label it reserve management. We just heard Jerome Powell make that statement. They will say it is temporary, and they will insist it's not quantitative easing. But the reality is that this is a pivot to expansion of the Fed balance sheet, adding liquidity to markets, and is in fact quantitative easing, which is extremely bullish, guys. Extremely bullish. You know, right now, I made a clip, I made a reel earlier on the Coin Zone. Go check that out. You'll see it here shortly. Make sure to give us a subscribe. That doesn't make sense. Make sure to just subscribe to the channel, like the video. But right now, guys, retail sentiment is like non-existent. The fear to greed index is still massive in the fear, and it's mostly retail. And it's sad to see because right now could be great times to accumulate. This is not investment advice, guys. But if you look at the cycles in the markets, 2026 historically, I'm talking over a 200-year chart, 2026 is a time period where lots of people make money. I don't think right now is a time to be bearish or hawkish, etc. Any of these things. If you see and you follow what's been going on this entire year, everything has been very bullish news story-wise, legislation-wise. We just heard Kristen Gillibrand, a Democrat, said that nothing is holding up this market structure bill. Trump said, if it lands on my desk, it's going through. So if we can get that as well before 2026, insanely bullish, guys. All right, Bitwise just sent out the first ever crypto index today with a ton of different altcoins in there. There's not, in my opinion, there's not a lot to be bearish on, guys. I think this is super positive for the space in general. Now, Jerome Powell still is speaking. We can take a listen in if we want. But again, like Dan said, right? Like Treasury Secretary Scott Besson said, no one really cares what Jerome Powell has to say anymore at this point because he's about to be gone. All right, we heard from Reuters, we heard from CNBC. Here's a question now. Maybe we'll see what this question is. We'll get back to it for a little bit.
There's been some discussion recently of the 1990s. In the 1990s, the committee did two discrete sequences of 3 quarter-point cuts, one in 1995-96 and one in 1998. And after both of those, the next move in rates was up, not down. With policy now closer to neutral, is it a foregone conclusion that the next move in rates is down, or should we think of policy risks as genuinely two-sided from here?
So I don't think that a rate hike is anybody's base case at this point, and I'm not hearing that. What you see is some people feel we should stop here and that we're at the right place and just wait. Some people feel like we should cut once or more this year and next year. But when people are writing down their estimates of policy and where it should go, it is either holding here or cutting a little or cutting more than a little. So I don't see the base case as involving that. So of course, a data set of 2, now 3 is not a big data set, but you are right about those 2 3 cut times in the 90s.
If I could follow up, the unemployment rate has been rising very gradually for the better part of 2 years, and indeed the statement today no longer describes the unemployment rate as remaining low. What gives you confidence it won't continue rising in 2026, especially when housing and other rate-sensitive sectors still appear to be feeling restrictive policy from the notwithstanding the 150 basis points in cuts prior to today?
So the idea is that with now having cut 75 basis points more now and having policy, I call it in a broad range of plausible estimates of neutral, that will be a place which will enable the labor market to stabilize or to only tick up 1 or 2 more tenths, but we won't see, any kind of a sharper downturn, which we haven't seen any evidence of at all. At the same time, policy is still in a place where it's not accommodative, and we feel like we have made progress this year in non-tariff related inflation, and as tariffs come through, as they flow through, that'll show through next year. But as I said, we're well placed to wait and see how that turns out. That is our expectation, but we're going to start to see the data, and it'll tell us whether we were right or not.
Yeah. Claire Jones, Financial Times. A lot of people interpreted your comments at the October meeting that, when there's a body situation, we slow down, to mean that, there won't be a cut now, there'll be a cut in January instead. So it'd be good to get a sense of why did the committee decide to move today rather than to move in January instead? Thank you.
Right. So in October, I said that there was no certainty of moving, and that was indeed correct. I said it's possible you could think about it that way, but I was careful to say other people could look at it differently. So why did we move today? I would say point to a couple of things. First of all, gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September. Payroll jobs averaging 40,000 per month since April. We think there's an overstatement in these numbers by about 60,000, so that would be negative 20,000 per month. And also, just to point out one other thing, surveys of households and businesses both show declining supply and demand for workers. So I think you can say that the labor market has continued to cool gradually, maybe just a touch more gradually than we thought.
Yes. And just to recap, guys, Jerome Powell is giving the space some liquidity. It's good to see. Jerome Powell looking like freaking Keanu Reeves right out of the Matrix in this photo here. But just to share this again, guys. All right, one more time before we end it out here. Cheap money is coming to the market. This is Anthony Pompliano, much higher. All right, Dan Gambardello. It's going to be the last times that we see Jerome Powell. Scott Bessent, no one really cares what he has to say anymore. But we got the basis point cut that we needed. It's very bullish. We are seeing quantitative easing. This is from Lynn Alden right here. Okay, the gradual print begins. And again, guys, the government will never stop printing money. And because of that, I'll probably never stop buying Bitcoin. So let's win together, guys. If you enjoyed this stream, make sure to give us a subscribe to the channel here. Make sure to like this video. You see on the bottom scroll there's our social medias. Follow me on X, Crypto with Paul. I just got a follow from Charles Hoskinson, so that's pretty damn cool. I'm pretty cool, guys. Okay, you might want to consider following now. I'm just joking, but I appreciate you guys for tapping in. This is the Coin Zone. I'm Crypto with Paul. We'll see you guys again tomorrow for another live. That's about it from me. Appreciate you for tapping in. Take care, guys.